Crude oil bounces a bit in the early hours on Tuesday. Before we start, a quick word from our sponsor. This video is brought to you by XNES, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The West Texas Intermediate crude oil market, or the U.S. oil market, has rallied a bit in the early hours to gain a little over 1.5%. When I look at this chart, the most obvious thing I see is that the $70 level will probably end up showing a bit of resistance right along with the 50-day EMA. But at the end of the day, when you look at the chart, you can see that we are simply consolidating. The question is, are we just consolidating to build up a base and go higher, or are we just settled in? Right now, I think you have to assume that we are settled in. If we were to break down below the $65 level, it would be absolutely toxic for the market, but there's no real signs that's going to happen. So I think range-bound traders continue to do well. In the Brent market, it's very much the same situation, although we are closer to the major support. So I suppose if I am going to buy oil, I like this one a bit better than the U.S. oil market, but at this juncture, I think the upside is somewhat limited as traders are worried about the idea of demand and, of course, whether or not the United States starts flooding the market with crude oil soon. We'll have to wait and see how that plays out, but really at this juncture, I think you've got to look at this through the prism of a market that is trying to find its floor at a previously important area that has been around for a couple of years. And really at this point, I think we just need some type of fundamental reason to get moving in one direction or the other. In the meantime, though, I think you just go back and forth. You continue to be range-bound traders. My name's Christopher Lewis. If you like the video, give me a thumbs up and make sure to subscribe to the channel for more analysis.